It's not often you see a lot of top-tier portfolio managers attend a company's shareholder meeting, but this isn't any company. It's Berkshire Hathaway.
When Warren does retire, this company may change in terms of, instead of accumulating assets, start to distribute assets, and that could be a home run for investors.
I don't fault Buffett for the way he's going about doing this. I know a lot of investors wish there was more clarity, but I think he's going about it just fine, because frankly I hope he's still running the company in 10 years.
If Mr. Buffett hopefully is around for another 5 or 6 years, circumstances could be that that person wouldn't be the number one pick. So I think it would be unfair to put pressure on an individual unnecessarily, but I'm pleased with the deliberation and in terms of the board picking the top three, and they have it down to one now.
What he basically said when asked the question, why are you buying so much IBM? He said, we think U.S. large cap is the best asset class out there right now. So in other words, he's saying, I feel comfortable again participating in public equity. And boy, that's a big change.
I mean, if you said to me, you're leaving the country and you'll be back in 5 years, give me one stock, I might have a hard time, but if you put a gun to my head, I'd say Berkshire. So we own Berkshire. We're not particularly increasing it at the moment because we find things that are attractive values, but if the stock goes down 110% above book, hello, he's buying the stock. And I think you could get some positive surprises.
There's so much talk about the share buyback, and the shares are cheap. I mean, we're within 3 or 4 percentage points of his limit, so we're there. But he keeps on reiterating the opportunity for him to put billions to work will probably only occur when the markets took a big swoon. So there's pluses and minuses with that. The thought of him buying back $20 billion worth of stock, which I would love, for him to do that, it would take some unique circumstances, which wouldn't be pleasant.
I don't need a dividend, no. I don't think we need a dividend. It would certainly be nice to be buying back shares, especially at these kind of valuations. And I think we could be buying back shares, you know, at these valuations and a little bit higher. So he's created a very low bar in the sense of where he's going to buy back stock at 110% of book value. And I know he'd still be adding to intrinsic value if we were buying at 120% of book value. So it wouldn't bother me at all to see him buying back some shares.
I think a very big elephant for him to buy, and he's talked about, you know, even international expansion. I would love, at the right price of course, I would love to see him buy IKEA furniture stores. I think that would fit in very nicely with Berkshire's very long history with furniture, and it would move the needle just as Burlington did in terms of underlying earning power at the conglomerate.
Our thesis is lower commodity prices stimulate the United States economy, and housing comes back. And if you want to play housing coming back without buying home builder stocks, financials, banks that own foreclosed homes, and wonderful brick and mortar companies like in his portfolio of private companies are a great way to play that.